Good afternoon and welcome to PayEntry's weekly webinar. This week's is on exempt or non-exempt. Are you compliant? This one should help you determine whether or not you have people who are classified incorrectly and show you how to fix that in the aftermath of whatever you discover. My name is Kathy Graham, and I am the head of HR services at PayEntry. I want to welcome you to today's webinar. We will be sending out a copy of the webinar in PDF format immediately following this presentation. Right now, if you, in the questions box there, you can write questions that come up during the session, and we will answer them at the end. If you cannot hear me or the audio or video is not working properly, would you please let me know in the chat or the questions box. So we're going to go ahead and get started with today's webinar. First of all, what is FLSA? And then we're going to talk about exempt versus non-exempt, the difference. We're going to talk about the two tests that you apply to determine if someone is exempt. We're going to talk about the different classes and the state variations. And at the end, we're going to talk about actions that you should take as an employer. Didn't list that here, but that's just what we will talk about at the very end. So what is the Fair Labor Standards Act? The Fair Labor Standards Act, which is always just referred to as FLSA in the HR world, establishes minimum wage, overtime pay, record keeping, and youth employment standards. So it's not just minimum wage that it deals with in overtime. There are some other rules about what employers have to keep from a record keeping standpoint, and what are the rules about employing minors. Today we are going to talk about minimum wage and overtime pay as it relates to exemptions. I've got let me just make sure we've got everything on here. Can everyone see? Well, it doesn't look like my slides are moving. That's not a good thing. I see that it's stuck on the PayEntry slide. So since we're so early in the game, I'm going to get out of this and get back in. This one thing, just to make sure we are doing this correctly. All right, and it is still not moving. So let me see what we can do to fix that. All right, maybe it's moving now. Let's just see if we got off that first one, maybe it will move. Here we go, moving slowly but surely. So this is the agenda that I just went over. Sherry, thanks for letting me know that. I could have been halfway through this, and it's a good thing that I knew up front so we can start it early, start it over again. Okay, so this is where we were talking about what is the Fair Labor Standards Act. And first thing we're going to talk about is the FLSA minimum wage. So some of this is just kind of an overview of what the FLSA provides for, but the federal minimum wage is only $7.25 an hour. That was effective back in July of 2009, and I know that most states have gone way above $7.25 an hour. And there are very few that are stuck on federal minimum wage. I think there are only one or two states that don't have a higher minimum wage. Most states have those minimum wage laws, and if you're in a state that has a higher minimum wage, you have to pay the higher of the two wages. On overtime, the Fair Labor Standards Act governs that, and it covers non-exempt employees, and those are hourly employees. They have to receive overtime pay for any hours worked over 40 in a work week at a rate that's not less than 1.5 times their regular rate of pay. And we're going to do a session on this later on. It probably will be a short one, not today, but regular rate of pay means you're adding in commissions and bonuses and other things that were incurred during that week. Let's just say they got a small bonus for meeting a department goal. That has to be calculated in as the regular rate of pay. So we will do a secondary overview of what regular rate of pay is in another webinar, because I think a lot of employers do misunderstand that. So there's no limit on the number of hours that an employee can be required to work in any work week if they're 16 years or older. And the FLSA does not require that you pay overtime pay or any premium pay for work on weekends, holidays, or regular days of rest unless overtime is worked on such days. So if that Sunday on a weekend, Sunday is does not take them over 40 hours in that work week, then it is not overtime. The hours worked, as defined as all hours worked include all the time during which an employee is required to be on your premises, on duty, or at a prescribed workplace. And as far as record keeping goes, you must display for this wage and hour law, you must display an official poster that outlines the requirements of the Fair Labor Standards Act. And you must also keep employee time and pay records. If you have any questions about your posters, our clients are entitled to subscription to Poster Elite in most cases, and they are supposed to give you a setup kit when you're first come on board, and anytime the poster needs to be updated, they will mail you another one. So if you're concerned about the posters that you have right now and whether or not they're current, take a picture of it and send it to me, and I will see where you stand in that respect. As far as child labor laws go under the FLSA, these provisions are designed to protect basically the educational opportunities of minors and prohibit them working in jobs and under conditions that would be detrimental to their health or well-being, and obviously during school hours. It does also restrict the number of hours that can be worked based on the type of work performed and when the hours occur during the day. Okay, so let's talk about exempt versus non-exempt. This is one of the most misunderstood sets of rules in HR, and if you're getting it wrong, you're not in the minority. Between 70 to 90% of employers get it wrong at some point during employment or your employment, and HR people also struggle with it sometimes. The main difference between the two is that non-exempt or hourly employees are entitled to overtime. Exempt means that they are exempt from overtime. Exempt employees do not get overtime pay. So there's the big difference right now in the detriment there to the employee. And that's why the Department of Labor cares, because they want to make sure that they are getting the benefits that they're entitled to. The IRS is not involved in this. It is just the Department of Labor, and they are the group that would audit you if they take a notion. So there are two tests to determine whether or not someone is exempt. The first is a wage test or a salary basis test, and the second are the actual job responsibilities. These two things must be considered together. You can't have one without the other. You can't just decide that somebody's title makes them exempt, because titles don't matter. These two tests are the only way that you can tell if someone is exempt. So the wages test, or the salary basis test, which is referred to by the FLSA, is the easiest of the two tests. Bottom line, the laws just changed at the first of this past year, or at the first of 2020. A salaried person or an exempt individual must earn at least $684 a week, and that comes out to $35,568 a year. If you have an exempt person or a salaried person and you're paying them less than that, then they are not exempt. First rule. The duties test, which is the responsibilities test, as if the employee meets that wage test, they do make that amount of money. Their duties and responsibilities actually determine the status. There are several classes defined by the Department of Labor, and each class has its own specific set of rules, and we're going to go through each one of those. All right, the first is the executive exemption. So in order to qualify as exempt from overtime, under this exemption, the employee, first of all, has to earn more than $684 a week or $35,568 annually. And then they must have a primary duty of managing an enterprise or a department or division of the enterprise. And they mean company. The Department of Labor uses some odd terminology, but by enterprise, they mean company. They have to supervise at least 2 full-time employees. They have to have the authority to hire, fire, or promote others, or have their recommendation or suggestion to hire or fire someone or promote someone be given heavy weight. I mean, if the boss says hire them, you hire them, that kind of thing. So they have to have that kind of authority. And not one or two of these have to be met, but all of these rules must be met, all of them. So if they don't supervise at least 2 full-time employees, then they don't qualify as an executive under the exemptions. Here's an example, and I want you to see what you think. Sally earns a salary of $54,000 a year as a customer service manager, and she directs a team of 4 customer service reps. She's currently interviewing to increase staff in the department, which means it's going to get bigger. Is she exempt or non-exempt? Think about that. She's exempt. She's exempt because she directs more than 2 people. She earns the correct salary. She's over $35,000, and she is head of a department or a division of the company. She's a manager. So she would be exempt. Here's another example. Harry earns $43,000 as an assistant manager in a pet store. So number one, he meets the salary obligation. While he oversees and sometimes coaches other employees, make sure that they're doing what they're supposed to be doing. He spends the majority of his time working the register, interacting with clients, or customers, and stocking shelves with new inventory. Is Harry exempt or non-exempt? He is non-exempt. Harry's not exempt because of the last phrase. He spends the majority of his time working the register and stocking shelves with new inventory. He's doing what everyone else is doing. So if he spends the majority of his time doing that, he is not exempt. Moving on to the administrative exemption, this is probably the most misunderstood and the most misapplied exemption. Obviously, we have the wage test, the $684 a week and the $35,568 annually. But then that person's primary duty has to be performing office or non-manual work that is directly related to the management or general business operation of the employer. And their duties must include exercise of discretion and independent judgment with respect to matters of significance. This last piece here, this exercise of discretion and independent judgment, is the key. If they're making decisions based on a policy and procedure that is already in place, then they are not exercising discretion and independent judgment. They're just following the rules. If they are determining or setting policy or changing policy in the process of doing their job, then they would be considered doing exercising discretion and independent judgment. So all of these rules must be met on each one of these. Here's an example. All right, Patty is an insurance claims analyst, and she earns $70,000 a year, so she's well within the wage test. She has no direct reports. However, her duties include interviewing clients and determining the type of coverage they should purchase, preparing estimates, and making decisions about whether or not they're eligible for coverage. Is this person exempt or non-exempt? They are exempt. And they're exempt because they're making decisions independently about their customers' needs. They're analyzing and they're making a decision and offering their judgment on which coverage would be best. So they would be exempt. Here's another example of the administrative exemption. Harriet is the administrative assistant to the CEO. She earns $72,000 a year, so she's okay as far as the wage goes. And she maintains the CEO's schedule. She coordinates meetings and attends board meetings to record the sessions. Is Harriet exempt or non-exempt? Well, I'll bet you anything, Harriet is on the books as being exempt. But she is actually non-exempt because she's not exercising any discretionary or any discretion or any judgment. She's doing what she's told. She may have some leeway as to determining, which room to rent for the board meeting, what they eat for lunch, those kinds of things. And not that Harriet doesn't make some have some direct interaction with employees and convey policies and procedures to them for the CEO, but she is not making those policies and procedures. This is probably one of the areas where we have the biggest problems is in administrative assistants to executives being classified as exempt when they actually should be paid overtime. Okay, the next classification for exemption is the learned professional. Here's the wage test again. It's always the same thing, $684 a week, $35,568 annually. This employee's area of expertise must be related to a field of science or learning and have come from a prolonged course of study. They primarily perform work that requires advanced knowledge or work that's intellectual in nature. So these are people that work in like attorneys, accountants, doctors, teachers, and you would expect those people to be exempt, and they are. Here's an example. Michael is a CPA, and he's an audit associate for a major accounting firm. As part of his job responsibilities, he provides tax and advisory services to client companies. Is he exempt or non-exempt? He's exempt. He has his CPA and he provides advisory services to client companies on a tax basis. Here we have another example. This person, after graduating from college with a major in education, Jillian accepted a job as a teacher's aide at a local elementary school. Her primary responsibilities include helping teachers prepare their lessons, print classroom assignments, and some record keeping. This person, exempt or non-exempt, is non-exempt because she is assisting the teacher that doesn't put her in charge of the responsibility of teaching. So she is basically an administrative type, but not a learned professional. She has the degree, but she's not using it. A creative professional is another exemption. Here, the person has to meet the wage test, and the employee's area of expertise must be on work that requires invention, imagination, originality, or talent in the arts or creative field. And this is commonly applied to people like graphic designers, artists, journalists, writers, those types that are very creative, and it comes from within. Here's an example. Kelsey's a graphic designer at a small technology company. Her primary duties include planning and designing concepts for advertising and other marketing initiatives. As assigned, she also handles design of sales and internal collateral, which is marketing materials. Is this person exempt or non-exempt? They are exempt. She uses her primary duties include planning and designing. So she's doing something, she's creating, and she handles design. There's no policy or no set thing that she follows. She uses her creativity to come up with those ideas. Brianne is an inker and a letterer, and she's contracted by a major newspaper. Her job responsibilities include retracing the paper's cartoons and formatting the text that goes into the cartoons as speech bubbles. Is this person exempt or non-exempt? Under the creative professional, they are non-exempt because they're retracing, they're not creating. They are doing something that is methodical and not any kind of design or anything of that nature. And then let's look at the computer professional exemption. These people have to meet the wage basis or the salary basis test, and then they have to be employed as a computer systems analyst, a programmer, a software engineer, or a similarly skilled position. Their primary duties include system analysis, consulting with users, or the design and development of computer systems or programs. I know we have a development team at PayEntry, and they are constantly looking at our system, looking at what our clients want to change about it, and updating it, also keeping it up to date with tax changes and other things like executive orders and PPP loans and things of that nature. So these people are very creative, and unlike a help desk situation, an employee that maintains company software or troubleshoots internal issues like your help desk doesn't qualify, even if they have the same specialized knowledge as a systems analyst or programmer. If what they are doing is maintaining and troubleshooting your internal system, those people would not be exempt. So here's an example. Paulina is a systems engineer at a global aerospace and defense company. Her primary responsibilities include development, testing, and management of missile guidance systems. Do you think she's exempt or non-exempt? She is exempt. Obviously, she is a systems engineer. Her title and her responsibilities include developing and testing systems for the company. Eugene is a help desk associate who earns an annual salary of $65,000. So he's paid above the salary level. He installs and troubleshoots company software, manages the phone system, and helps keep the business's data secure. A very, very important position within the organization, but this is a non-exempt or hourly position. And that is just written into the law. The outside sales exemption does not have a wage test or doesn't apply the wage test. The employee spends most of their time making sales or securing contracts, and they have to be regularly outside of the company's office as part of their work. Now, that's a little challenging with COVID and the situation that we're in right now. So since this is temporary, there haven't been any law changes yet, but if it continues to be the way that it is, we may see something coming out of the Department of Labor that addresses it. But normally it doesn't matter if they're working remotely from home, doesn't qualify as outside sales if because they consider any fixed site, whether it's home or office, used by a salesperson as their headquarters or for telephone solicitation of sales, that's considered an employer's place of business. Even if they don't own your house, you are doing work for them in your home. So sitting and making calls to make sales, just basically like oh gosh, what do we call those people that call us and bother us? Telemarketers. Those people, just because they're working out of their home, are not considered outside sales. They generally would be what you would think it would be, and that would be someone who gets in a car and goes and visits clients and takes them to lunch and tries to get a contract signed. That is an outside salesperson, and they qualify for the outside sales exemption so that you do not have to pay them any overtime. However, if they sit in your office or they sit at a desk in their own home and make one call after the other, they are not qualified for the outside sales exemption, and they would be hourly employees. Here's an example. Ashley's a sales rep for a local beverage distributor. She spends most of her time pitching her company's products to hospitals and supermarkets on their location, which is not like now, but in general, the way that it used to be. Is she exempt or non-exempt? According to the FLSA, she is exempt because she's out and about trying to make sales. And Mary, however, is a sales development rep who spends most of her day making cold calls to prospective buyers. While an hourly employee, she receives a commission for every client that ends up purchasing her company's service. Well, I kind of gave it away in this because she is an hourly employee. That makes her non-exempt. The next category of exemption is highly compensated employee. If you have an executive that earns at least $107,000, $107,432, I don't know where they get these numbers, and they primarily perform office or non-manual work, and they regularly perform at least one duty that classifies under one of the other exemptions, like the executive exemption. This one is often used if the highly compensated employee doesn't manage anyone, because you know the executive has to manage at least two people. So if you have an executive that doesn't manage anyone, they would fall usually under this highly compensated exemption. And that's the end of the exemptions. Now the state variations, federal laws state a baseline. We talked about the minimum wage. But some states take it even further with the duties test. For example, in California, to qualify for a learned professional exemption, an employee must hold a state recognized license or certification. In California, this computer professional exemption category has been altered, and the minimum salary for an engineer or a programmer to even be considered for an exemption is $96,968.33 per year. And then also, California doesn't recognize the highly compensated employee as a legitimate reason, not excuse, but reason for exemption. So you do need to look at your state's rules. If you are not sure about the rules, please email me and I will do some research and find your state and see if there are any variations. A lot of time you will find California, New York, and sometimes Illinois have different rules, but the South is not prone to putting additional rules in place. You might see Washington State also, or Oregon, have some extra rules. So what should you be doing right now? Number one, look at your job descriptions. And I bet probably at least 40% of you are saying, we don't have job descriptions. Well, you need job descriptions because that's where things start. Make sure that all your positions that are designated as exempt meet the salary test and the duties test. You need to correct the status of any jobs that violate those rules. You need to ensure that your hiring managers and supervisors are trained on this. They need to know the law. And review annually to make sure that someone hasn't slipped through the cracks and they're exempt and should not be. What happens if you don't do this and the Department of Labor shows up on your doorstep? You could be you would be probably given penalties for noncompliance with the FLSA rules. You would also owe the individual or individuals back pay, potential overtime, and maybe penalties on top of that. So it's a very expensive thing to misclassify a person. We talked last week about independent contractors being very expensive. This is the next, this is probably the first piece of legislation that results in major penalties. And I know that you don't want to tell somebody, your boss, that you're being penalized by the Department of Labor because of this, because they'll look at you and think, well, I thought you were the HR person and you're supposed to be taking care of this. So make sure you're doing this correctly. If you don't have job descriptions, or you have job descriptions and you don't know if they're classified correctly, our HR services area can help you. We do project work all the time. We do handbooks, we look at job descriptions, we write job descriptions, and we do a lot of other things that will be able to tell you if you're doing things correctly. So if you need us, reach out to us. We're here. I am going to look at the questions here now. It says, is it possible to receive this presentation via email? Yes, we will send it out immediately following this, well, as immediate as it posts to my website. We will send this to you in PDF format so that you can have a piece of reference material. Ryan has a question: if someone's paid hourly but meets the criteria for exempt, that is paid enough with the right responsibilities, are they still non-exempt because they're paid hourly? If you classify someone who's hourly, if you classify someone who is exempt as hourly, the Department of Labor doesn't care, because you are going to be paying them overtime. So if you have a position misclassified, it's hourly and it should be exempt or salaried, the Department of Labor doesn't care about that. So you can leave that alone if you want to. It's not a big deal unless you want to, if you're paying a lot of overtime and you need to reclassify it because of business reasons. But if they are paid hourly but meet the criteria for exempt, you're fine, because they're getting the benefit of any laws that allow overtime. And Sherry has a question: what issues could there be with an employee who is non-exempt but should be exempt? If they are non-exempt and should be exempt, they are not being paid overtime. And that's what the Department of Labor cares about. Hopefully they're tracking their hours and you are paying them for every hour that they worked. But if they are non-exempt, Sherry, I think this was the same question Ryan asked. If they're exempt, if they're hourly, but they should be exempt, it doesn't matter because you're giving them the benefit of overtime. So is the same question that Ryan had. Yes, you can have everybody in your company can be a non-exempt and pay them overtime, and you're fine. You don't have to classify anyone as exempt because the Department of Labor doesn't care about that piece of it. And does FLSA apply to employers of all sizes, or is it 50 plus employers? If you have one employee, FLSA applies to you. So you just have to have one besides yourself, and you're bound to follow these laws legally. Okay, any other questions? If you think of something afterwards and you would like to email that to me, go ahead and do that. My email address is cgram@payentry.com, and I look forward to helping you with your special projects and helping you with your exempt or non-exempt questions, we have one more. It says, I'm exempt but do not have direct employee salary. Is within the limits. I'm a staff accountant that handles AP and payroll. You are exempt because you would be in the learned profession. So you are fine. You are exempt. Another question, the administrative exemption seems the hardest to classify. Can you expand on that? It is the hardest, and sometimes it does require looking at the job description and bottom line, evaluating how much discretion and judgment, independent judgment they have. If they can make decisions that change company policy, then they are exempt as an administrative exemption. If you have a particular position you'd like for me to look at, I'll be happy to do that at no charge. If you just send it to me and ask me to look at it, I'll be glad to take a look at it, because it does depend on the position. There are some administrative assistants working for high-level CEOs and CFOs that do make decisions outside policy. So, and they have the authority to do that, but there's a fine line. So we look at it on a case-by-case basis when it comes to the administrative exemption. Okay, well, thank you for attending today. It's been a pleasure, and I look forward to seeing you next week. We have one of these webinars every week, and you should get an update. I think you just got an email that gave you the next 3 sessions. We look forward to seeing you next week, and have a great day.